All right, here we go, here we go. We are live, I believe. Yep, yeah. Well, good morning, traders. Good morning, everyone. Today is Wednesday, September 3rd, and I've been away for 2 weeks. So let's see what happens today, I want to go in today, taking it kind of easy, just getting used to the charts again. I took a week off for the Jackson Hole Symposium, which was actually probably a pretty good idea. I have no idea how I would have done, obviously, but there were a lot of traders that got destroyed that week, and I've destroyed accounts, messed things up. I've blown it like that before, so I just decided to stay away from Jackson Hole Symposium. And then we ended up taking my family on a vacation for the last week. And so it's been a solid 2 weeks since I've opened up the charts and done any trading. So we got 5 minutes until open, and I'm leaning more bullish on the day. I believe so. We're going to kind of lean into it with a bullish bias. I was kind of looking for this move down here. It happened pre 9 o'clock even, so 8:30 tapped into this this zone, and then that was the there's a pair of equal lows down in here, or right here actually. I guess you can't see those probably, but right here, these equal lows were taken. And yeah, so that was kind of what I was looking for. It already happened. We have the open is here at 9:30 at this blue line. And then the red line, the red dotted, is news. We have a 10 o'clock folder. What is it? 10 o'clock is Jolt's job openings. And that one is not a huge mover. So I'm not too worried about that one being in a trade during that one if I need to be. But we shall see. So let's take a look here, kind of looking around. So here on the 4-hour, price is tapped into some discount higher time frame levels, seen a nice bullish response. And even my early entry model is an inversion fair value gap right here, this gap that's been flipped. And the 4 hours making my model bullishly, coming down into the low of the Goldbach range. So that's added confluence for me on the 729 range. We have these equal highs, relative equal highs, all sitting up in here. So at the very least, I'm anticipating today to pop up in here and take some of this liquidity. So the 4 hour looks nice. The 1 hour over here, similarly looking kind of nice, doing the same kind of thing, making a breaker inversion setup. Potentially making a breaker inversion setup. A little bit of an accumulation, so we can kind of see. I'll look at it, show you on the 5 minute. Really, price has hardly left kind of this range here. So I'm kind of considering this a pre-930 accumulation range. London made a bit of a move, so let's see here. This chart isn't the best to show it, but Asia accumulated. London distributed this morning, made a nice move up, and then pre-open has just been accumulating. You can see it on the 5 minute, the 15 minutes, kind of ugly. Oh, we have 2 minutes to open, and over here we can see prices distributing. There's a bit of a stop hunt right there into this previous first presented fair value gap, coming back down into the monthly equilibrium. So there's a couple of equilibriums sitting in this range, which price has been accumulating around. We can expect price to accumulate around equilibriums. And let's see here. This is YM Dow over here in the corner, and it's already kind of distributed for further sell side liquidity. So the assets are not currently correlated, and we have 1 minute till open. So I'm going to kind of wait and see here. I don't think there's going to be a setup here at open. There is this gap here forming a potential inversion. We'll just assume it to be an inversion. And here's a breaker. But I don't think I want to take that as a short if it did confirm. I feel like what I would like to see is I would like to see price come down in here a little bit and then push bullishly and take a long somewhere down in here. We can see that there's bearish SMT up in this zone. This is an automatic SMT indicator. It's really nice. It catches maybe 85-90% of the SMTs for me, so I don't have to sit here and draw them in all the time. It is a paid indicator, but it's like the only one I've ever actually paid for that thought it was worth it. There's a link in the description of the video if that's something you're interested in. It's a one-time fee, which I don't like the indicators that are like 40 bucks a month kind of thing. This one's like 65 for one-time fee, and I really like that. But it's super helpful. Doesn't catch them all, so I'm always double checking when I go into a trade. If this doesn't show an SMT, and even if it does, I like to double check what it is and make sure it's confirmed. But this indicator is nice in that it helps identify SMTs. So price is pushing nicely down into the sell side over here. What I am not wanting to see is I am not wanting to see price form my model in the next minute or two. One of the stats I got from TradeZella is that one of my worst macros is the time windows is the 9:30 window, 9:30 to 9:40. And then I went and back tested that. And what did I find? I found that my model in the 9:30 to 9:40 window was a 37% win rate, whereas if I waited until the 9:50 window, was a 77% win rate. So TradeZella clued me into that. It's a backtesting journal analytics software. I've been using it for about a year now, and it's really helped me along in my journey, both for backtesting, collecting data, and getting to kind of see what's going on. Because without data, and I know it's not sexy at all to journal and to collect data, but it's the not sexy things that provide us what we need sometimes. And there's a link to TradeZella below. So here we took this liquidity forming see, this is where I was talking about like an SMT forming, but it's not confirmed because it's a 1 hour and a 15-minute SMT. And that's not confirmed until this next 15-minute candle closes and the next 1 hour candle closes. Let's see here. So here's this fair value gap. Just noting it because it looks like my model inverting this would make my model. All right, let's see what happens. Price is kind of making a bit of a descending flag, bit of seek and destroy. You can see lower lows here, higher high, lower low. So I'm seeing this as an accumulation zone up in here. We have more liquidity taken down in this zone. And let's just even zoom out for a minute here. Let's go to the 5 minute, kind of take a peek. So London made a nice expansion, and then price has just kind of been doing a bit of seek and destroy since about 7 a.m. So still kind of just waiting, seeing. Here's the midnight open, which usually I would target the midnight open. I would short down to the midnight open. With this expansion in London, I'm less inclined to expect price to come all the way back down to midnight. Still could have been a short there, but I wasn't interested in that. So it's 9:35. Price is kind of stalling out. It did a bit of a stop hunt above these equal highs into this gap for continuation. And that even is a continuation model that I could take if I wanted to short this, if I got a confirmation down in here. I'm not going to do it. I'm interested in seeing what happens a little bit more down in here and longing. Let's see. Still haven't seen anything yet. Still just waiting. I'm going to zoom out a little bit again. It's over here. Pushing through this fair value gap, or into it pretty deeply. We have the two of these gaps, which you can kind of combine, or you can, you can keep it separate or you can combine them. What I tend to do is I keep them separate until the price pushes through a gap like that, and then I go through and I combine them. Kind of curious looking back over here. Zooming out some. So NQ took this swing up here. ES and YM didn't, so there's a nice big bearish SMT right here. And this is an example of an SMT that the indicator did not get. Wouldn't mind setting this here to display the current session. There we go. Look, cleans that up a little bit. Just too many things going on. So here's an accumulation range. Now the question is, was this the manipulation? So there's this relative equal highs that price manipulated, and then it's going to send it down for delivery down into this zone. Or is this accumulation, manipulation, distribution for continuation? And that I don't know. I mean, I don't think anyone can know. And that's why we just take our best guess, and that's why this is a game of of odds and probabilities. Like for me, I'm favoring bullish delivery. Because of all this liquidity up in here. I could be wrong. All it could have wanted was this before it delivers before their sell side. So we'll see. All right, it's 9:40. But it feels good to be back in the charts. I really missed it. Whew. I miss trading. I like it. It's something that like I don't do because I want the money. I do it because I like it. I'm gonna turn off the SMT indicator. Just a little too much noise at the moment. Don't really need it. I don't need to confirm any smart money reversals. I don't like this price action. See how these candles individually have large wicks, but price isn't really moving. What I like to see is this right here, like one large wick relative to all the wicks around it, and then distribution. One large wick on this candle, distribution. That's what I like to see. The other thing that TradeZella clued me into a few minutes ago, I was talking about it as an analytics tool. And what that means is it just tells you what it gives you, takes your data and turns it into actionable reporting or actionable steps. It uses the reporting tool to give you some insight. And one of the insights that I got was that Wednesday was my worst performing day. So today is Wednesday, and I had a 6-week losing streak on Wednesdays where every Wednesday I was red for like 5 or 6 weeks. I forget which. And I broke the losing streak with a break-even day the last week I traded. But I'm still being mindful of that. And so Wednesday for me is a low risk day until that's consistently proven otherwise. And so that was super valuable insight for me that if I just didn't trade Wednesdays, I might be to a payout already on this account. So that kind of data is invaluable. And just reminding myself here that it's Wednesday, and no matter what I do, I'm going to do it with low risk. So London high was taken. I wonder if Chris Postal took that. Short. It's been high resistance price action this pre New York. So this is what I wanted to see. I wanted to see price come down in this gap for a continuation move, just like it did down in here. This fair value gap here was made. Price came down. Didn't really move at all. Was this Tuesday? Yeah, Tuesday night. And then distributed further. Excuse me, here on the 15-minute chart. Price came down into this old new day opening gap, retested that. And then here on the 4-hour, it's currently working on creating this fair value gap. So I'm anticipating this candle doesn't close for another 15 minutes. I'm anticipating this gap being here. And what I'd really like to see is price come down into this gap and then distribute for liquidity up here. But we shall see. I don't get to control the market. What's interesting, I feel like price is accumulating prior to the news, and usually jolts isn't a big mover. So I'm curious, does it start distributing right before the news? Does it wait till the news, create a further manipulation, and then distribute? But that's this red dotted line, 10 a.m. news. One thing I'm keeping in mind today is I always have different, what do I call them, psychology scripts, but this one right here is a new one for me. I print them out, big bold letters, and I have a stack of them. I read all of these before I start my trading day. These are, so I have a whole pre-trading routine. Like I review my rule set, I review my criteria that I'm looking for, I review my daily bias, I review my trading plan, all of these things. And they're all just checklists, so they're super easy to go through. And I go through these checklists every single day, so my job is easy. I don't come to the charts and wonder what I'm doing. I just go through the checklists, and all of these are available for free. If you join my free Discord, it's all free. It's just a trading community, and I'm starting to put more and more content out there to help people. And these checklists are one of the things. But part of my pre-morning routine is also doing some psychology work. So whatever I'm currently struggling with the most, or what I feel might hinder my trading the most, I go through and I just reread these scripts that I write. And so for example, this one says, perspective. Your risk is the fee to get into the trade. And so what this means is, if you happen to win, great. Otherwise, treat your risk as the fee to play the game. And I really like that, because if we anticipate that we're putting money on the table and we're not going to get it back, we are a lot less emotional if it comes time to lose it, or if it starts looking like we're going to lose that trade. But then if we win it, if the trade's a winner, then all of a sudden it's all the better. So, and that's similar to one, if you've heard me read before, was this one, which is, when you place a stop loss, assume the money has left the account and it's a business expense. So you see I have two of these, because it's really important for me to accept the loss before it even happens. And that's different to say I'm going to manifest or create a loss and have losing expectations for myself. I don't. I just have the understanding that I can't control the outcome of any individual trade, and that I need to accept that as equally as it could be a loss, it could be a win. So that's been helpful for me. And part of my morning routine is reading a handful of those reminders that I need to hear. This is ugly. I really hope none of my friends are getting chewed up in any of this garbage. And that would have been not fun to sit through. I was eyeballing a short here. Here's a breaker, an inversion in a short trade. And that just would have been, you know, say you market it in or limit ordered on that somewhere. Maybe, gosh, I maybe had to stop here. That would have been a tough one. It still wouldn't even hit 2R. Maybe if you had taken this as a stop hunt, you would have hit 2R if you would have had that as a stop hunt. Right there, that candlestick on the 930 open. So price here tapped into the previous week's low. This is the level that price has already flipped. You can see yesterday, was it Wednesday? Or this morning, a London session distribution flipped the previous week low from resistance into support and then continued on. And now price is retesting that. So here, these dotted lines are standard deviations of Asia. Price came into the 2.5 standard deviation. So here's 1, 2.5, 2.5 standard deviations. Typical place where we would expect a reversal. Reversal or retracement. So the previous day's midnight open obviously was right there. And I feel like there's too much going on when I do it this way. I feel like I'm always refining what indicators are doing what, and I care less about how many indicators there are. So today's session, oh, that's the wrong one. Let's check this out. ICT everything. Since there's, oh, actually price is doing something, so I'm gonna go look at that. So I'm looking here at this. This is where the SMT indicator didn't pick up an SMT or isn't showing an SMT, a bullish one. So I'm just coming here manually looking for it. That's a very, very minor SMT. So I'm going to the 15-minute. There is no bullish SMT on the 15-minute. And then on the 1 hour, while it wouldn't be confirmed quite yet, there is an unconfirmed SMT right in here. This price action is not very clean. An SMT that I'm not stoked about. And a 10 a.m. news. Makes me feel like I want to wait until the news drops. I want a little extra confirmation here. And so for me, price can come back down into this order block right here, about as low as I'd want to see it go. I just threw this position tool on here. It's not exactly where I would have placed my stop. Ooh, ES is ugly. YM is looking okay. So now is that the stop hunt? So here's another tapped into equilibrium, stop hunted right there. Formed an inversion right here. Could be. But I didn't have all of my confirmations for a long, and here the long looks questionable. Because obviously most people would put their stop loss below the swing. I don't always do that. I found I can get away with a lot shorter of a stop loss usually, but that's where most people would have put their stop loss, would be below that swing. So here's this fair value gap tapped into, inverted this inversion right there. Still looking a little like seek and destroy to me. Still just accumulating in my eye. Let's zoom out a little bit and see. We'll do it over here. Actually, I want to draw on another chart. Move over to this screen. So here's this 5-minute accumulation range. And not that, so this could have been the manipulation of this swing high over here for sell side delivery. But when I see this accumulation range after that sweep, I almost feel like this is the manipulation, the real manipulation. It's going to manipulate down and then distribute, so the day is going to expand bullishly, what I think. But we shall see. What I think and what the market does are two separate things. 2 minutes until both the 1 hour and the 4 hour candle close. Whew. I'm tired from traveling. Ooh, we were out in the sun all week swimming. It's exhausting, but amazing. Like, what more is there than swimming with your 8-year-old? So 2 minutes. Oh, we also have the news dropping here in 2 minutes too. So it's all good. I'm not in a hurry. I'll hide that. I'm going to put this back. Midnight opening. Just for now. I'll clean that up later. So it looks like we're starting to potentially form some bullish SMT down in here with a 4 hour low with YM. And the London low with YM, potentially. So what I'd like to see is, I'd like to see a push down. So after this candle, the 10 a.m., this news, I would like to see it push down and then move up. And if I do that, I have a trade probably. So YM is taking the London low right here. NQ is not. For me, I'm considering this move to be the Judas lower. And I could be off sides. We shall see. All right, 10 a.m. news is dropping. And let's see. Red dot is there. Jolt's job openings. I don't want to take an inversion in here in this accumulation range. I really don't like them like that generally. I would like to see NQ push down, even though there's SMT forming. That's the thing that would invalidate, or not invalidate, but would allow me to take a trade without a stop hunt on NQ is this SMT, because then YM did the stop hunt. And here it's looking like it would want to do it. Okay, look at that. Jolts is actually pushing pretty high. Usually Jolts, I don't see this kind of movement. Oh, there's an inversion right there even. Look at that. Right there. My position tool is just placed. It's not where I would put my stop loss. So there's a 2-to-1 if I market it in. So 3 would be 129. Too late, too late. It's moving without me. Shoot. Man. Come on, come on. So could take it as a breaker potentially. I don't need to be impatient. Price did not tap into that 4-hour fair value gap. That's what I was really wanting to see. I wanted to see it push further low into sell side. Question is, do I take it on this breaker? It's 10:02. I really don't like this price action. I do not want to get caught up in seek and destroy. ES is not looking pretty. YM looks okay. So I could be missing my trade here. All right, close above here on this breaker. And look at that. I would have gone break even on this right here. But YM is not moving. Look at that. I don't know if you can see that. YM. I think I'm okay with this, with not being in a trade here. This is just not clean price action, which can happen if London distributes like this. New York AM can be a little ugly, and I don't have to take a trade. I can be patient, and I can take one in the PM session too. Okay, look at that, retesting this breaker. Just kind of waiting and seeing. I'm curious how this idea would have played out, you know. I chose not to take it. At this point, I would have been break even on the trade because it got 70, 60+% of the way to my target. I would have gone break even. That's just what my rules tell me to do. There we go. 20 seconds left on this candle. And I'm imagining here would have been a W. So now I need to, so yeah, that would have been a win. I need to reevaluate, go back and look at this, you know. Would I make the same choice again? Let's take a look. So over here, price dipped into this fair value gap. It's exactly what I wanted to see. Bullish response. What I didn't get to see is I wanted to see price push down and take this 4-hour low right there. Kind of like how this 10 a.m. candle is taking this 6 a.m. candle's high. When this one opened, I really wanted to see it take its low first. That was one thing I was wanting to see. And then over here on the 5-minute chart, we have this accumulation. And I was wanting price to distribute away from that to provide a long setup. And instead, it provided the setup in this consolidation. And I don't like that. That's not perfect. So this to me was a high risk trade. It met all my rules and it met all my criteria, but it didn't look clean. So here, targets acquired. I'm gonna make a note of that. Let's just kind of clean up the chart here real quick. Making a couple notes here for myself. I can come back and annotate what I did and didn't do and why I didn't do anything, because what you don't do is also really important. You know, if you find yourself freezing on good trades all the time, you need to know that. So my target was acquired. It's still not looking nice. Like, this is just not distributing. And by distributing, I mean moving. Here we are still not far from the 9:30 open, 45 minutes later, and the 8:30 open. So I feel pretty good. I think self-control is one of the hardest things in trading, and knowing when not to take a trade because it's low probability is important. And it's kind of a bummer too, because then you watch like, oh, I could have won that trade. That's part of it. Kind of like, well, not going to go into any analogies. Look at this. Just ugly. And if my model would have been to shoot for any more than 2R, it would have come back on me. So now this 4 hours taken, that makes me feel bearish. This high was taken, and then this reaction. But I'm not going to take a short here because of this accumulation range. And in fact, oh, we can see what happens. So similar thing here to what just happened. Here was a stop hunt. I wanted an inversion outside of the accumulation range. Here it gave the inversion outside the accumulation range, but it closed way away from that. There's all these equal lows right down in here. And this kind of price action is where traders just get destroyed. Like I saw poor Nutty Bar wrecked a whole pile of accounts yesterday. These candlesticks are printing emotions. They're not printing money. And yeah, that trade that I tape read was a winner, but I didn't take it because I saw this as low probability. I saw this as candles that were printing emotions, not money. And similarly right here, I see it too. I see a short play, but I see candles that are printing emotions. Then I'm not, if I'm going to put risk on the table, it's going to be pretty. Like, I would rather take this long right here that's perfect and pretty and have it be a loser than take this trade any day. Man, I took 2 weeks off and the algorithm really must not like that. It's given, there's been like 3 viewers this morning. So for me, price isn't moving. My rules dictate I don't trade when the 5 and the 15-minute are accumulating. And while this is an accumulation range, so is all of this. This is just seek and destroy. So I'm going to shut the live down. I think it's a good start to a brand new week, even if I don't take a trade. I'm okay with that. I'll see if price cleans up a little later, but I think that this is just not wise to sit here in front of these low probability